Good afternoon, friends. Welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today, we would be discussing regarding the trends, the setups, the technical indicators, technical patterns on Nifty, Bank Nifty, as well as on the different asset classes. Now, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that the undertone of the market has become very bullish. Uh, we have seen a faster retracement from the swing low of 16,400 mark. The daily patterns of Nifty and my bank Nifty are getting stronger and stronger day by day. So any dips would be a buying opportunity. Now looking at the Friday's closing, now let us discuss the index analysis, what we have observed and what we might see the market in markets happening in the next week. Now let us come to the Nifty daily charts. On the Nifty daily charts, you can clearly see this is the daily charts, and as we have been discussing in our previous records and videos, that Nifty took almost from 19th October, Nifty made a high of 18,600. It took till 20th December to make a downfall, make a bottom, and then a rally. Now you can clearly see here October, November, December, and January. December and almost January. So almost it took 3 months downfall, but it hardly took maybe 20-25 days, to recover almost more than 75% or 70% of this downfall in a very short span of time. Now this is a classical example of a faster retracement. Now here you can see RSI is also a comfort zone. Now let us see what Nifty has formed on the daily charts. This is a rally up from the swing low. Now this rally is been into an upward rising channel. I will show you this particular parallel channel on the Nifty daily charts. Now you can clearly see that Nifty has been moving in this particular upward rising channel. Perfectly it is overlapping. It is into the midway of this particular channel. So the undertone is bullish. After this sharp rally of last maybe 20-25 days, a pullback or a correction or a profit booking cannot be ruled out. So maybe this particular downward support trend line could act as a strong support area. So maybe almost we can see that 18,050 to 18,000, which is a psychological mark, could act as a strong support area. So looking at this pattern, overall pattern, the strategy would be buy on dips in Nifty. Now let us discuss the important supports and resistance in the Nifty for the next week. So the important support in the Nifty for the next week is placed at, now let us see the first support. The first support in the Nifty is placed at 18,118. Second support in the Nifty is placed at 18,055. And third support in the Nifty is placed at 17,964. Whereas on the upside, the first resistance in the Nifty is placed at 18,342. Second resistance is placed at 18,458, and third resistance is placed at 18,605, which is the all-time high. So these are the important supports and resistance in the Nifty. Traders are suggested to follow these levels and try to trade in the direction of the primary trend. And the primary trend is positive, so the strategy would be buy on dips. Now let us discuss what we have seen in Bank Nifty. On the Bank Nifty daily charts, you will see, I will show you the Bank Nifty daily charts. Here on the Bank Nifty daily charts, it has been also a significant rise in the last couple of trading sessions. Now here also you can see it made a top on 25th October 2024. The high was 41,829. From October 25th till December 20th, the trend was down. So you can clearly say a 3 months of downfall and maybe 20-25 days of retracement. This is the retracement what we have been discussing. Now this retracement I will show you has been also into upward rising channel, parallel channel. Now you will see this is a rising channel in Bank Nifty 2. Now this is the rising channel. Bank Nifty has been moving in this particular rising channel. As I said, it has a sharp rally. So a pullback or a profit booking cannot be ruled out. RSI is also still into a comfort zone. So maybe some sort because of this sharp rise and 2 days of sideways movement, sideways to down, some sort of consolidation cannot be ruled out, or a profit booking or some sort of jerk, maybe 200 point of correction, and then from lower levels we might see again buying coming in the Nifty. So initially we have a resistance area of maybe almost 39,100 to 39,300. This could be the resistance area or target area for next 2 weeks. So any pullback in the Bank Nifty should be used as a buying opportunity and try to build long position at the lower levels. Now let us discuss the important supports and resistance in the Bank Nifty for the next week. The important support in the Bank Nifty for the next week is placed at 38,007 is the first support. The second support is placed at 37,862 and third support is placed at 37,427. Whereas on the upside, the first resistance is placed at 38,717. Second resistance is placed at 38,929 and third resistance is placed at 39,368. So these are the important supports and resistance level in the Bank Nifty. Traders are suggested to trade or follow these levels and try to trade in the direction of the trend. And as I said, looking at the chart patterns, the trend is positive. Buy on dips should be the strategy. Now let us come to the third segment of our show, which is option analysis. In option analysis, we will try to identify, we will try to figure out where is the position built up or the action seen in the calls and puts in Nifty and Bank Nifty. Now let us see what we have seen in Nifty calls. In Nifty calls, the action was seen in 18,300 calls, then 18,400 calls, then 18,500 calls. Here you can see there has been a rise in the open interest. Option premium, some sort of profit booking was seen because of Friday there was some sort of exhaustion seen in the Nifty. Implied volatility is still in the comfort zone. It is between 11 and 12. So the trend is still intact. Any dip should be used as a buying opportunity. Now let us see what we have observed in Nifty puts. In Nifty puts, the action was seen in 18,200 puts, then 18,100 puts, then 18,000 puts. Now here you can see there has been a rise in the open interest. Then the option premium slight correction was seen. Implied volatility IVs are also between 14 and 15, so it is into a comfort zone. So maybe some sort of time wise or some sort of profit booking, some sort of cool off could be seen in Nifty also, but that dip should be used as a buying opportunity. Now let us see what we have observed in Bank Nifty calls. In Bank Nifty calls, you will see on the screen the action was seen in 38,500 calls, then 39,000 calls, then 39,500 calls. Now here you can see there has been a rise in the open interest, but there was a significant drop in percentage premium, percentage change in the premium. The implied volatility is slightly higher. It is between 19 and 20. So looking at this pattern or looking at this action, we feel that some sort of cool off could be seen, maybe 200 or 300 point of correction in Bank Nifty, and then from lower levels again we might see buying coming in at those levels, particular support area. So now let us see what we have observed in Bank Nifty puts. In Bank Nifty puts, you will see the action was seen in 38,000 puts, then 37,500 puts, and 37,000 puts. Now here the most important part is implied volatility. The IVs are shooting up. It is between 22.5 to 25. So this shooting up of implied volatility is clearly indicated that now that the option writers might come in and might get active in writing Bank Nifty puts in the next week. So writing or pressure in the Bank Nifty puts will push Bank Nifty on the upside. So maybe any correction in the Bank Nifty should be used as a buying opportunity. As I said earlier also, the charts are also showing positive. The overall trend is positive. The option analysis is also indicating that maybe Cool off cannot be ruled out, but that should be used as a buying opportunity. So this was the option analysis. So overall view is buy on dips, looking at the candlestick patterns, the technical indicators, and the option data. Now let us come to the final segment of our show, which is positional call. In positional call, I have identified one stock from cement sector. The name of the stock is ACC. You will see the stock has shown or formed expanding triangle. I will show you on the charts. The price is positive. The price volume action is clearly indicating the positive trend in the stock. This is the expanding triangle, the upward resistance trend line. Now this is the downward sloping trend line. You can clearly see on the charts. Initially, the volatility is narrow, and then it is slowly and gradually broadening of this volatility. So now you can see it is a rounding bottom formation initially. It has seen a breakout. The RSI is also into comfort zone. Currently, the stock is quoting at 2,358. So the buying range in the stock for the long-term investors is, and even if the swing traders, the buying range is 2,358, and on correction to 2,300. For swing traders, I mean to say short-term traders, upside position target is 2450, and for long-term investors, the target is 2750. So you can clearly see, that particular in this pattern, expanding triangle, the price volume action is showing positive strength. The buying range is between 2356 2358, and on corrections to 2300, and upside long term position target is 2750. So definitely the stock is looking positive. ACC should be into long term investment portfolio. So traders are suggested to accumulate the stock in the range of 2358, and on corrections to 2300 for an upside target of 2750 for long term. So let us conclude the show. Thank you very much for watching the show, and have a nice trading week.